Hi, welcome back to another podcast with Mr. Hagan. And on this podcast, we're going to do another example of calculating income taxes. And this time, we're just going to change up some of the details. So this is going to be this time a family of one, and so it's just going to be some person has a job, and they have 0 children, and they have an income of $130,000 per year, and here's our details. You get a standard deduction. We set up $12,000. I said that on the previous video. That's not quite the right number, but just a nice simple number that we're using. And we're going to take say the child tax credit is $1,000 per child. And then, of course, we have any retirement contributions that this person's going to make. They also get deductions. Now, how are we going to go ahead and do this calculation? Well, there's a couple things that changes from the previous video that I did where we had a couple that was married filing jointly. Now we only have a family of one. So first, that means that their standard deduction is going to be cut in half. So now their standard deduction, instead of being $12,000, that was, for 2 people married filing jointly. Now their standard deduction is only going to be $6,000. So they're going to get a $6,000 standard deduction for one person. And let's say that his retirement contributions is like on my previous video, he's going to put in $10,000 a year for retirement. And the child tax credit is still $1,000, but he doesn't have any children, so he's not going to get that. So let's calculate this guy's taxes. So step number 1 is we subtract deductions from gross income. So let's see, this guy had $130,000 of gross income minus the $6,000 standard deduction, minus the $10,000 that this person puts in their retirement account. And so we go ahead and we do our calculation. So we're going to have the $130,000 of gross income minus the $6,000 standard deduction minus the $10,000 that they put into retirement accounts. Those are their deductions. That gets them to $114,000 of taxable income. That's $114,000 of taxable income. And by the way, let me say this right now. I'll do another video at some point, hopefully, where I talk about this a little bit more in depth. But this number cannot go below 0. Okay, the taxable income can't go below 0. Can't go below 0. And how would that ever even happen, you might ask? Well, if your deductions, if you made $130,000 of income, and you take away the $16,000 of deduction, then of course you end up with $114,000. But what if you only made, I don't know, what if this person made $10,000 of income, and then you subtracted away their deductions and their retirement contributions? You would actually get a negative number down here. Well, that can't happen. That number can never go below 0. Okay, and maybe on a future video I'll do an example of that idea. All right, so either way, this guy's taxable income is $114,000. So now we come over here to our tax line, and we put our $114,000 at the top, and we put our 0 at the bottom. And now we need to see our brackets. We're going to work through the brackets. So I'm going to use these brackets are coming from 2007 or 2017. I'm sorry. These were the married filing jointly tax brackets that I used on the previous video, but this person's not married filing jointly. This person's single. So, okay, just let me slide up here to the single brackets. And here we go. They're the single brackets. So the single brackets, as you can see, are different. So any income from 0 up to $9,325 is going to get taxed at 10%. So we got to come over to our tax line, and we got to record that. What was that? $9,325. That was our first bracket. $9,325, and that gets taxed at 10%. That gets taxed at 10%. And then our next tax bracket is going to be that $9,325 up to $37,950. So let's record that. That's going to get taxed at 15%. So that's up to $37,950. So we'll put that about here, and that's going to be $37,950, and that's going to get taxed at 15%. And then above the 37,950 up to 91,900 will get taxed at 25%. So this is going to go, the next bracket's going to go from 37,950 up to 91,900. That's 91,900. And that gets taxed at 25%. And then the next bracket is going to go from 91,900 up to 191,650. Oh, but this guy only made 114,000, so that's where his taxable income stops. Okay, so we don't go all the way to the top of this bracket. We stop when we hit the taxable income. So we're going to go from 91,900 up to the taxable income of 114,000, and that's going to get taxed at 28%. That's going to get taxed at 28%. Okay, and now it's a matter of doing calculations. So remember how we do these calculations. We take the top of the bracket minus the bottom of the bracket, and then multiply by whatever the percent is, whatever the rate is for that bracket. So the first one's going to be 9,325 minus 0. So we got $9,325 of income in that bracket multiplied by 10%. So that's going to be $932.50. That's going to be the amount of taxes owed from this bracket. Okay, next bracket, 37,950. Top of the bracket minus the bottom of the bracket, which is 9,325. So I'm going to go ahead and put that in my calculator. 37,950 minus 9,325. There's $28,000 of income in there, 28,625 to be exact. And that's going to get taxed at 15%. And so we got to multiply that by 0.15. Sorry, I just lost it. Let me redo that. $28,625 times 0.15. So that's another $4,293.75. All right. Now, he still made more money. So in the next bracket, he goes from 37,950 up to 91,900. So top of the bracket minus the bottom of the bracket. So let me do that. 91,900 minus the bottom of the bracket, 37,950. And I get income in there of $53,950 times 0.25. That's if you're in the that's the 25% tax bracket. And so that's going to be times 0.25. And so that's going to be this guy's paying a lot of taxes, $13,487.50. And we're still not done because this guy's got income from 91,000 up to 114. So I got to take the taxable income minus the bottom of the bracket. So it's 114,000 minus 91,900, and that's $22,100 of income that's going to get taxed at 28%. So you're going to multiply that by 0.28, and that's another $6,188 of income. And now we got to add all these together to get our final number. So let's see, I got 6,188 plus $13,487.50 plus $4,293.75 plus we still have that $932.50 at the bottom. Total taxes owed $24,901.75. Okay, lots of taxes to be owed. And now we come over to our last step. And our last step was we take the $24,901.75 and we subtract away the tax credit. Oh, but this guy doesn't have any kids, so it's going to be $1,000 a kid times 0. He's got nothing in terms of a tax credit, so he really is going to owe $24,901.75. So let's record the three things that we want to be able to say here at the end. Taxes owed, $24,901.75. Average tax rate is, remember how we calculate that. We take the $24,901.75 divided by the $130,000 of income that the guy earned. Multiply that by 100, so divide it by 130,000, and then multiply that by 100, and we get an average tax rate of 19. It's about 19.15%. And then his marginal tax rate was the last bracket that he was in, which was the 28% tax bracket. That was his last bracket. So his marginal tax rate is 28%. 28%. So what's hurting this person is they're losing, their standard deduction isn't as big because they're not married, so their standard deduction was less. And what also is hurting them is these tax brackets. Okay, the tax brackets are half of what they are if they were married and filing jointly, like I did in my first example. Okay, so all of that, and then of course this guy doesn't have any kids, so he's not getting any tax credit at the end. So all of that means $24,901.75 in taxes, which is roughly 19% of his income going to the United States federal government. Okay, one thing he could do to lower that, of course, is he could put more money into his retirement account. That would give him some more deductions. But of course, if he does that, he won't have that money to spend on goods and services. So lots of hard choices to make when it comes to paying taxes. Okay, now keep in mind, this is I'm looking here at some examples based on old numbers. The 2018 tax bill, that I'm making these videos in February 2018. And so there's going to be some changes to what these numbers are. But none of that should matter. If you can go through this three-step process, that's all that matters, right? The three-step process, then, whatever the tax bill says, you can do the calculations because you do your step 1 deductions, you do your step 2 work through your brackets, you do your step 3 tax credits, and no matter what the tax law is, you can figure out your numbers. Okay? All right. Thanks for joining me. This has been Mr. Hagan on another podcast, and we'll see you on the next Econ podcast.